Good morning, everybody. Welcome for this new webinar at Iceberg Data Lab. Today, we're going to talk about a very important topic, which is deforestation. Because Iceberg has developed this year a new data set, a new indicator for corporates, which is the deforestation impact. So welcome to this webinar that we have entitled Measuring Deforestation Risk and Impact. For this webinar, I am with Vivian, our expert from our German office. Good morning, Vivian.
Good morning.
Vivian has worked developing the methodology for our deforestation indicator, and she's been with Iceberg Data Lab since the creation of the company. And I will tell you a word about Iceberg to start. So the creation was 6 years ago. We are a young European ESG data provider, Paris-based, but we have now 3 offices, Paris, London, and Frankfurt. We are the leader in terms of biodiversity data. That's where we started our expertise, calculating biodiversity impact of corporates. We have developed our model over the past few years across the whole scopes, across the whole value chain of companies. So we are able to calculate impact on the environment of companies across scope 1, scope 2, and scope 3, upstream and downstream. So we pride ourselves with a very granular data for all our indicators, climate, biodiversity, and deforestation, as we will discuss today. How do we do that? We have analyzed the whole value chain of companies and more than 2,300 goods and services that are consumed or produced by the company. And that's how we are able to provide scope 3 upstream and downstream data. Our database today is around 9,000 listed companies across the world. So that's equivalent to the MSCI World, plus all the debt issuers in euro and in dollars, so the Bloomberg aggregate, euro and USD. Finally, a key differentiator of Iceberg is our strong scientific backing. Indeed, we are used by around 30 research departments of universities around the world. And if you look at academic papers published in the field of sustainable finance, you will find the name Iceberg Data Lab quite often. We also have a scientific committee that meets every quarter with external bodies such as the WWF or the Natural History Museum. Anyway, scientists that sit down and with our research team or modeling team and who review and validate our methodologies. Our products, our data sets that we offer to financial institutions are climate on the one side, carbon footprint, temperature, avoided emissions, etc. On the other hand, nature, with our flagship indicator, the corporate biodiversity footprint, the CBF. But we do as well dependencies to the ecosystem, positive contribution, and asset screening, so to know if a corporate has an asset, factory, or workshop, or something located near a sensitive natural area. We have a suite of regulatory products. We assist buy-side institutions, investment firms to produce their environmental reporting, to analyze the whole footprint of their portfolio in terms of climate, nature, and finally, now, deforestation. So that's what we're going to talk about today. We have produced a data set for the deforestation impact that will be given in square kilometers per company. Then this deforestation impact will be broken down per commodity. Where does this impact come from? The activity in which commodity? And finally, we're working on the reduced and avoided deforestation impact. So that is the next development of the product. Today, we already have the history of the impact, how the deforestation impact of the company has evolved over the past few years, but soon we'll be able to compute if there is a reduced or avoided impact through certifications or things like that. A snapshot of our clients. We're Paris-based, we have a strong footprint in France, but we have started expanding internationally. So you can see many financial institutions in the UK, in the Netherlands, in Switzerland, or in Germany now, and we are setting foot in Canada as well. So this for the company development. So let's talk about deforestation now. And why measure deforestation? Of course, it is a key issue when we look at the tropical primary forest loss, for example, over the past few years. And it's useless that I say a word how forests are important for the world. They support immense biodiversity, they regulate climate, absorbing carbon dioxide, they protect water system, etc. So that's why financial institutions have started, corporates have started first to pay attention to the deforestation impact, but over the past few years, financial institutions have started to set up deforestation policies to exclude from their portfolios or from their loan book for banks, companies that present a high deforestation impact. And more recently, if we look just at the regulation in the UK or in Europe, regulation has been kicking in terms of deforestation, and we have in Europe the EUDR, EU Deforestation Regulation, which bans the sale of commodities linked to deforestation in the EU market, including soy, cattle, palm oil, wood, cocoa, coffee, and rubber. So that's why it has become a key topic for financial institutions as well. It presents, of course, portfolio risk. If you have entities within your portfolio that can face fines or reputation risk that can cascade to your own investment company, for example, and it's as well with regulation now a real market risk. So that's why our clients start to be concerned with deforestation and want to be able to analyze it or flag the companies that are exposed to that risk. But what are the drivers of deforestation? The main drivers are, on the one hand, agricultural expansion is the main one, and it's through those 7 commodities or 7 activities of companies. Then we have the extracting activities, land clearing for mining, for example, but as well land clearing for infrastructure, transport, hydropower, urban extension, or wildfires that have an effect on deforestation. In our model, for the first release of this data set, we have focused on agricultural expansion. Why? Because it's the main impact, but we are planning on developing the product, of course, this year, and by adding land clearing for mining or extractive activities, because mining is a sector that we know very well at Iceberg Data Lab. But for now, let's focus on those activities in terms of agricultural expansion. And here on the map, you can see where we have located our analysis. We are focusing at 22 countries, Latin America for beef, soy, cocoa, and coffee, South Asia for palm oil, cocoa, coffee, rubber, and timber, and Middle Africa for cocoa, coffee, timber. So, Viviane, can you tell us a bit about our corporate deforestation impact, please?
Yes, sure. I'm very happy to introduce you to the corporate deforestation impact. And what we want to do is to provide a comprehensive and comparable assessment of the company's exposure to deforestation across the company's supply chains. So we do this to allow financial institutions to, for various reasons, to screen issuers, monitor portfolios, or to support engagement. And we do this by providing 3 core metrics. I think Thomas already teasered some. So the first is the gross deforestation expressed in square kilometers. It provides a clear measure of the absolute land area linked to a company's sourcing and production activities. And second, we have the deforestation intensity, which normalizes deforestation per €1,000,000 of revenues. And this allows you to benchmark companies within and across sectors and quickly identify outliers with unusual high exposure relative to their size. And the third one, which I also find very interesting, is a deforestation by commodity, which breaks down a company's footprint by key drivers such as soy, cattle, or cocoa. And this level of granularity is especially powerful for engagement because it highlights exactly which commodity is driving the deforestation impact of a company and in which parts of the value chain should be maybe prioritized. So on the next slide, we'll look at how we compute these metrics, starting with the end-to-end modeling process and then diving into the underlying commodities and the certification that sits behind the numbers. So at Iceberg Data Lab, we always start with the physical quantity of commodities that are linked to each company, and we don't only look at the parent commodities, or we call them parent commodities, such as cocoa beans, palm fruit, or timber. We also capture their transformed or derived products, which we refer to as children commodities. So for instance, you have cocoa beans, but it will be processed into cocoa powder, which can be used for chocolate. And for green coffee, it will be transformed to roasted coffee, which can be used in coffee beverages. So most companies do not actually buy raw agricultural commodities, they buy processed goods. And if we only look at the parent commodities, we would miss a significant part of the supply chain exposure. So to make this work, we apply conversion ratios, and these ratios translate processed volumes back to their agricultural origin. So for instance, a conversion ratio tells us how many tons of green coffee are needed to produce 1 ton of roasted coffee. And this step ensures that even if a company only buys processed products, we can still trace the activity back to the agricultural stage where the deforestation actually occurs. So once we have the physical quantity of each commodity, we apply the so-called deforestation ratio, and this ratio captures 2 things. First, the total annual deforestation occurring across high-risk countries, and second, the share of the deforestation attributable to each commodity. And these ratios are built from a wide collection of scientific, academic, and NGO data sets, including from the World Resource Institute, the FAO, or the UNDP, or Global Forest Watch. And when we multiply the commodity quantities by the conversion factor and the deforestation ratios, we obtain an initial estimate of the deforestation associated with those volumes. But this gives us only the deforestation first before accounting for mitigation measures such as certification. So after applying the deforestation ratio, we adjust the result using the certification ratio, and this accounts for the portion of commodity volumes covered by credible certification schemes. And these schemes vary by commodity and are assessed against several criteria, which we'll explore on the next slide. But first, we look at the we look at the deforestation impact, and we distribute it across the relevant scopes. So we have scope 1, when a company is directly involved in producing the commodity or in land use activities, and scope 3, which captures all the upstream supply chain impacts. And this is where the vast majority of deforestation exposure typically lies for most of the companies. And by combining all these elements, commodity quantities, conversion ratio, deforestation ratio, certification adjustment, and scope allocation, we obtain a quantified deforestation footprint expressed in square kilometers. So now I will...
So certification, I know, was a very important part of the methodology because, of course, corporates are aware of it, and when they are directly involved with deforestation, a lot of them have set up certifications to take commodities from a sustainable forest. So we had to take that into consideration in the model. But we won't go into details, but we had as well to select which certifications are credible, and because some are not. So if you would like more details, of course, we can have follow-up meetings, but certification was a big part of the model.
Yeah, so actually we have here a slide now showing what we do with certifications. So because we consider not all commodity volumes have the same level of risks, some portion of what companies buy may come from suppliers that follow strong environmental and social standards, but the quality of certifications vary quite a bit. So what we do in our methodology is that we only recognize credible and robust certification schemes, and we assess them against 4 strict criteria. So the first one is an external audit, meaning that the certification needs to be verified by an independent third party. And the second is a complaint or grievance mechanism, which allows also stakeholders, including communities, to raise concern. The third one is selectivity. The scheme must, of course, have a meaningful requirements, not only blanket approvals. And the fourth one is global coverage that ensures that the certification is recognized and applicable in multiple producing countries. And only certifications that meet all of these criteria are considered effective in reducing deforestation exposure. And when we have those certification schemes, we map them to the commodities they cover. So for example, we have the Rainforest Alliance, which applies to cocoa and coffee. We have RSPO, which applies to palm oil, and FSC and PFC apply to timber and so on. And when a company sources certified volumes, those certified quantities are adjusted downward in the model according to the strength of the scheme, and this prevents us from overstating deforestation impacts for companies that have already invested in more sustainable sourcing, while avoiding the risk of giving too much credit to weaker or unverified certifications. Yeah, and this certification step is quite important because it reflects real improvement in sourcing practices and gives financial institutions also useful lever for engagement. So before we move into the results, I would like a moment to bring everything together and to wrap it up and to place our model into the broader global context. So according to the FIO and the World Resource Institute, the estimated gross deforestation worldwide in 2024 was just under 100,000 square kilometers. And this gives us a big picture, the total land area of forest loss in a globally in a single year. And when we apply our methodology to the companies in our IDL universe, we calculate a total of 81,000 square kilometer across all scopes. And what you see is then that it's a subset of global deforestation, and it's a part that can be linked to commodity supply chains and ultimately to corporate activity. And what our model does, it translates global environmental signal into a structured company level assessment, where we start with the physical commodity flows, connect them to geographies where the deforestation is actually occurring, and adjust for certification and distribute the impact into different scopes. So I hope you have now a relatively clear understanding of what our methodology captures. And let's turn to the results and see how this deforestation exposure is distributed across sectors and commodities. So on the next slide, we have the impact per sector to see how it's distributed across sectors in our current universe. And as you might expect, the food sector stands out as the largest contributor, and this is driven by its strong reliance on all the food commodities like soy, palm oil, cocoa, and coffee, those commodities that are linked to agriculture expansion in high-risk regions. And second, we have the paper and forest sector. Here we have Obviously, the exposure, which is linked to the use of timber and pulp, which are associated with forest conversion, harvesting pressures in some countries, and the degradation of natural forest. And tied to this is also the construction and real estate sector, which also uses timber-based materials a lot. And we also see retail and wholesale, which shows a material exposure. And this sector doesn't produce goods themselves, handle very large volumes of forest-linked consumer goods coming from various sectors like food, beverage, paper, or construction materials. And finally, we also have the beverage sector, which relies, for instance, on cocoa and coffee and contributes also a noticeable share. And those companies source a lot from West Africa or Latin America. And these sector level insights help already financial institutions quickly identify where deforestation risk is structurally concentrated and maybe where screening, prioritization, and engagement efforts may have the most impact. But now let's look more closely maybe at the commodities themselves and how much each contributes to the overall deforestation. And we have here what you see is a chart that breaks down the deforestation exposure by commodity across our IDL universe. And we see here that soy is a leading contributor. This is consistent with global patterns. Soy expansion, especially in South America, is a major driver of land use change. And it also has a big role in the animal feed supply chains for beef, for instance. And second, we have cocoa and timber, which also appear. Cocoa expansion, particularly in West Africa, continues to exert pressures on forest, and timber contributes both through direct conversion and selective logging, depending on the region. And then interesting, we have palm oil, which appears maybe lower what some people might expect. This doesn't mean that it's not a major deforestation driver anymore. It's still very important, but when we checked in our data, we saw that many of our companies source higher shares of certified palm oil. The RSPO is a very established certification for palm oil that is quite heavily used and which reduces the impact in our IDL universe. And cattle also appears quite low in this data set, and this is mainly because our current issuers in the universe have limited direct exposure to beef production in these high-risk geographies, which are mostly Brazil and surrounding countries. But maybe as our coverage expands, the cattle contribution may increase in this chart. And rubber and coffee show also smaller contributions, but they remain material in very specific countries, and especially where smallholder production drives expansion into forested areas. So this commodity breakdown is essential for targeted engagement because it highlights precisely which supply chains are driving the deforestation impact for each company. And to illustrate this more concretely, let's walk through an example from the food sector, where we can see all these different commodities combined to create an overall footprint. So what we have here is a real life example of a major chocolate company. It's a well-known global brand that is included in the MSCI World Index. So it's not a hypothetical case, and it reflects the kind of exposure patterns we observe for large multinational food companies with complex supply chains. So in this example, the company has an estimated deforestation footprint of around 1,300 square kilometers across its upstream supply chain. And when we break it down by commodity, we see the two major commodities stand out, which is cocoa and palm oil. And let's start with palm oil. So the company uses more than 3,300 tons of cocoa-related products. And while the certification rate is quite high, actually at around 86% through schemes like Rainforest Alliance, the certification does not entirely remove exposure. This is because cocoa production, particularly in West Africa, still overlaps with region experiencing forest loss. And so even with strong certification uptake, cocoa remains a significant contributor. And when we look at palm oil, it tells a slightly different story. Here the company sources around 460,000 tons, but the certification coverage is much lower and only around 24%. And deforestation is still a major driver in Southeast Asia, and the lower certification level significantly increases the adjusted impact. So this example illustrates how the different components of the methodology come together. We have commodity volumes, country level deforestation dynamics, certification adjustment, and scope allocation. And maybe we didn't cover it here in this webinar, but in our model, we model all the commodities, the quantities for each of the companies. And when we have reported data, in this case, we had reported data, we replace the reported data with our modeled ones to have consider more the real life volumes. So
Thank you.
Yeah, so slide, we show why commodity level transparency is so important, and the drivers of deforestation risk can be very different. Cocoa on one side, palm oil on the other, and it can lead to different engagement priorities. But now let me hand over back to Thomas, who wants to show you a bit how it looks on the platform, I think.
Indeed, we have integrated the deforestation impact into the console, which is the Iceberg client platform, web-based, that all our clients can access with their own login. And so that's how it looks like. You will be able to find the different indicators, the gross deforestation in square kilometers. Here, you will find it per intensity. You will also have those charts at the bottom by commodity here. So for that company, we could see that it is the impact is mainly due to soy and coffee. And finally, at the moment, you can see the historical data to see how the impact has evolved through time. So yeah, we didn't want to put one company and do kind of shaming, so that's why you will only see a screenshot here. However, I can show you the new console of Iceberg quickly, just because it's the new version that we have released this month in December, so December 2025. And the big difference with our previous console is that now you can see all the indicators that Iceberg produces, even if you are subscribed only to the biodiversity footprint. For example, you will be able to see dependencies, the carbon footprint. It's lagging a bit. Okay, that can happen. Sorry for that. Let me just type a company again. I will take Total Energies. Yes. So you will be able to see all indicators from the biodiversity to the carbon or climate indicators, the temperature, but also the physical risk, transition risk, the assets with an interactive map where you can spot physical assets of a company that are located near a sensitive area, EU taxonomy data, alignment data, and that's where you will find the deforestation tab now. So back to our presentation. And to conclude, let's talk about some concrete use case for financial institutions. The first one is obviously to do exclusions on your investable universe. So our clients use the deforestation impact to exclude high impact issuers and commodities from the investable universe. and that can help you to set up a deforestation policy. The second use case will be portfolio risk monitoring. So within your portfolio, you'll be able to identify high impact issues and commodities among your investments. That will enable you to perform some portfolio screening or risk monitoring and reduce your portfolio's deforestation impact. Finally, the last use case would be engagement and target settings regarding deforestation. And that's where the granularity of our data per scope, but as well per commodity, can enable you to have an active policy in terms of engagement. Thank you very much, Viviane. I think we've covered the whole all aspects of this new data set. If you have more questions or want to follow up, please contact us, and one of our consultants will be in touch. Thank you very much, Viviane. Thank you, everybody. Have a good day. Bye.